guys. Today's video will cover the weekly profile that I talked about yesterday, which led to the trade that I took on the pound yesterday, cable. And so I want to point out something that you can carve out for yourself as a trading model for yourself, because most of the times I think the reason behind me opening a community, having a one-to-one mentorship, was to make ICT easier for people. And to my own understanding, if you can choose what is easier for you in all these models, then you can find consistency and profitability. All right, so one of many things that I found very easy to understand, or very easy to use, is the weekly profile. And as much as I don't personally use it at the moment often, because I already have a model for myself which I already implemented the market space, I feel that the weekly profile, understanding the weekly profile, can give you an edge in the market, or can give you an extra confidence when taking a trade. Now, we will go through the price action for this week on Euro USD and the Aussie dollar plus the pound dollar too. So we'll understand the price movement, what exactly the price do, and what exactly led to the trade that I took on cable yesterday, Friday, 14th of April. So let's get into it. All right, so this is the euro, and from what we can see, let me use New York so everyone can understand what I'm pointing out. Sorry. All right, so we're going to mark from Friday, last week Friday, so that we can understand we can know when the start of the week is from. So we want to cover the price action from this candle to this candle. All right, so from this candle to this last candle there, that's the price action we want to cover. All right, so now if I zoom out from the chart without understanding anything about ICT, if I'm to zoom out from the chart just like this, for you to give me with a layman understanding of bullish or bearish understanding, what exactly is the market doing before this week right here started? The market was bullish, right? So that's the understanding. The market was bullish. So now, are the understanding of ICT liquidity in quote, where is the next draw on liquidity? All right, have this here. That's the next draw on liquidity. Now, ask yourself again, what RA should price move to add as a support for price? What RA is price at currently that should add the support for price to move towards the draw on liquidity, the major draw on liquidity? That is the easiest way to find your weekly objective. All right, so we have this rejection look here. All right, so right there we have it. So now I'm going to scroll down to 1 hour, and I'm going to zoom out. I'm going to look at this price action here. Sorry, the 15 minutes. I'm going to zoom out for us to look at the price action here. All right. So what did we have here? We had Monday last week to Friday last week, and from the zoomed out idea, you will notice that this was Monday. Let me start from the opening price. That's from around yeah. All right. So this was last week's price action here. So now, from what we marked on the daily, we know that this is the rejection block here, and we're expecting price to use as support to move towards the next drawn liquidity, major drawn liquidity. So here we are, Friday's price action. This was where Friday. So let me mark that properly where the next week started from. Monday 12th. Monday through this session. Right there. Alright, so this is where Monday started from. So which means that this is the start of Monday and this is the end of the previous week. Right. So this is where we want to study. Now look at Monday's price action. And now this is why most of the times that I always say that if you're struggling with ICT, you're struggling with understanding price action, you're struggling with coming up with a bias for the week, always wait for money to play out. Always wait for money to play out. When I first of all started and I was having issues with gaining a bias, I always waited for Monday and Tuesday to play out. Monday and Tuesday to play out, and I pop in Wednesday, because the Monday and Tuesday, so like I said, I usually wait for Monday and Tuesday to play out. When I just started ICT and had issue with finding my bias, because when Monday and Tuesday's price action play out, you'll be able to form or derive what the bias did for the rest of the week. So there's something I always discuss about profiles, understanding profiles, and I've said this countless times from a video from ICT. Let me see if I can find that playlist. YouTube. Yeah, this playlist right here. So this playlist is untouched by many people out there. So that's why you see all these figures of views right here. You see a lot of people who have not even watched this playlist. So from this playlist, ICT mentioned something about when to anticipate the high of the week and the low of the week. And there's something I always always hope to see during when the week starts, which is from around Tuesday, New York. And I think it goes by this. So if you are in a bullish market environment, all right, you should see the low of the week made either the low of the week made Tuesday, New York, to at most Wednesday, New York. 60% of the time. So most 60% of the time you see that happen. So the rest of the times it might not happen. So it's not a must that this is what I want to see. All right, but it's as trading is a game of probability. You need to have a higher chance for you to understand what's going on. That's why you need basically you need to create your model, you need to create a trading journal for you to have an edge in the market. Because if your probability is very low, if your understanding of the market is very low, your higher chance of being profitable and consistent will be very, very low too. So 60% of the time you'll see that. So if the market environment is bearish, 60% of the time you'll see the low, I'm so sorry. Let me go again. In a bullish market environment, 60% of the time you'll see the low of the week made either Tuesday, New York, to at most Wednesday, New York. And in a bearish market environment, if you see the high of the week either from Tuesday New York to Wednesday New York 60% of the time. So if you look at that, where did we have the low of the week? On Monday. So not on Tuesday, right? But we check price action from here. Where was the high of the week made? Here. So the high of the week made here. And what happened from the rest of the day? From the rest of the week? We're bearish, right? We're bearish. So that was it. And why was the high of the week made here? Because we took out previous highs right here. Took out previous highs. So the criteria, one of the criteria is to know whether the market is making a high of the week somewhere, but making the low of the week somewhere. It has to run stops, and running stops at this particular time of the week will validate whether it's going to make the high of the week there or low of the week there. So if you see here, we run stops from Tuesday, and we made the high of the week Tuesday right there, and Tuesday New York, and then we just drop for the rest of the week. Now notice here, we didn't make this drop on Tuesday, but what made this low? Yeah, the low of the week, because we ran these stops. And not only did we just run these stops, all right, we also used the rejection block as a support level for price to go higher. And then what happened next? We dropped, and then we use that as support for price. So what is the order flow from a daily time frame that I said we should look at when I zoomed out? Bullish, right? So which means that any move downwards, if you want to be, any move downwards will be a low probability market environment for you, because it's not following the order flow. All right, so any move downwards will be a Judah swing or a run on stops for price to neutralize liquidity and continue going higher, right? So there we have it here, using this rejection block as support. Now, a typical Judah swing. So what happens next? We have Tuesday. Let me mark Tuesday's price action. So we have Tuesday right here. From Tuesday, we took out all these equal highs right here. And keep marking out everything it takes out. We took it out right here, and then we came into an area, pulling back. All right, then Wednesday, right, opened there, and then Thursday, there, and then lastly Friday. There. So if you look at, remember what I mentioned before on how to criteria to know when the high or low of the week will be formed. It has to run stops, right? So you see, why did Friday give us that reversal? Why did Friday give us the high of the week? Because it ran stops. And what was the stop it ran? That daily liquidity, that daily level of liquidity. So I know I'm talking about this in hindsight, so it might seem like, oh, I can do this. I can when the market opens, I can anticipate this to happen. What happened here? The market didn't drop, right? The market didn't drop like on Monday did. So that's why I always mention sometimes, if you're starting ICC, make sure to leave out the first day of the week or the first 2 days of the week for you, so that you can derive your bias from the markets. You can derive your, so now we've taken out major buy side objective on Friday. So where is the next level price to go to? I won't talk about that now because that's not the main reason behind this video, but we'll discuss that later on in another video. But now I've been able to understand what the weekly profiles should look like, what you should be anticipating when something happens in the week. So first thing I pointed out was, first of all, for you to know when the low of the week or the high of the week will be formed, you need to understand the order flow. All right, and the order flow is giving you a bullish environment. This is the narrative is bullish. Then, if you should now see a bearish movement towards an area or towards taking out liquidity, then you're probably seeing either low of the week or low of the week there or the high of the week there, which we had here, running stops and using this as a level of support. And then we have here to where we run stops and we use this area as a high of the week. Then we just used an area as a level of resistance and we dropped. So right here, you see how we moved from each day. So we had Monday, a Judah swing, Tuesday, expansion, pullback, consolidation. Wednesday had the most expansion, but we took out this high right here. Thursday, we pulled back, went higher, traded higher, expanded. Then Friday, because we ran stops, we now have to have the week there. So it's all in hindsight right now, and it sounds so simple to understand, it sounds so simple to implement, but the one way to practice and one way to always see this is to leave at least one day, the first day out of the week, which is Monday. Let it go, because once you let Monday go, I think that solves 60% of your problem in finding a bias. Let Monday go. When I first of all started, like I said, I let Monday and Tuesday go. So let Monday and Tuesday go made me see, for example, me leaving Monday here and me leaving Tuesday here. I've seen two things. I've seen that price dropped, use this as the support, all right, which is like a judo swing. Tuesday took out this high. So from Wednesday, what am I looking at? From Wednesday, I have now that this is a clear objective of smart money, that high right there, that we will run this high very soon. And then Wednesday comes, and what happens? We build. Let me zoom into Wednesday there. This is the 15 minutes time frame. Let me see. What was on Wednesday? So on Wednesday, utilizing the determined price theory, what happened from the opening? We had opening here. Then we had London open from here. All right, so you see, we just ran this low a little, and then we consolidated for the rest of the day. And then just give me a moment. Okay, this was a news. Yeah, this was a news on Wednesday. Not participating in the news, but if it was just a normal move, and that's why the news happened. That's why this consolidation happened, because prior to the news, which was going to happen. So if you notice something, somewhere acted as a strong support for price throughout the consolidation, and that was, yeah, all right, that was this right here. So imagine you waited for, imagine this wasn't a news day, and immediately these stops were run out here, and you understood the order flow, you understood the narrative for Monday and Tuesday, you skipping Monday and Tuesday, and you probably gotten from where this formed, because if you look at it, it's still in the Q zone. So you probably would have gotten from, yeah, had your stops, yeah. And what is the high? Is this a high probability market environment? No. Why? Because we have news in New York, which means that London is consolidating. So I'm just giving an example of if this was a normal trading day whereby there was no news at all. If there was no news at all, this would have been a proper setup, because we ran the stops out and we gave the displacement, creating this fair value gap. In fact, if there was no news at all, we would have seen the move happen from this candle right here. But because of the whole news issue, so I'm just giving this an example. So if you got in from that fair value gap, you would have had your targets as here. So you see that I hope we all understand the examples that I'm giving here. So all right, so yeah, that's pretty much it. So let me just do